car insurance rates have been skyrocketing. And if you haven't shopped the marketplace in recent years, you can easily be spending $1,000 more each year than is necessary. So here are 6 tips to help you reduce the amount you are paying for your car insurance. When you are in the market shopping for car insurance, the first thing you need to do is to identify the really good companies that you should consider doing business with. Consumer Reports regularly conducts a survey to determine who the best providers of auto insurance are. USAA and Amica Mutual have historically topped that list, but they are not the only players you should be considering. You can visit your local public library for free access to Consumer Reports or pay for a one-time access and make a list of those companies that you want to get quotes from. Alternatively, J.D. Power publishes an annual report where it ranks insurance companies based on customer satisfaction. The survey looks at 5 factors: billing, claims, interaction, policy offering, and price, and lists the top insurers by region. One thing that stands out is that the best companies are often those smaller regional players that do not advertise on national TV. The second step is to get quotes from the companies you've selected. You will want to ensure the quotes are for the same coverages. That way, you will be comparing apples to apples. So the same amount of coverage, the same deductible, and so on. This allows you to see how one company stacks up against the others. Now that you have your list in front of you, you will want to call these companies. Plan on spending about 15 minutes on the phone with each insurer. Pull up a copy of your current policy. It will help you answer some of the questions the insurance representative may ask. This is the hardest part of the process, but it's an important one, so don't skip it. Another option is to work with an insurance broker who can pull auto insurance quotes for you from multiple companies. I do not recommend comparison shopping websites. They are essentially lead generation outfits that sell your data. So you will want to call the individual companies or use an insurance broker to get your quotes. The third step is to compare what each company quoted you in terms of coverage, limits, and deductibles. By doing it this way, you can easily see which company is offering you the best deal that suits your wallet. Something else that is important to note here is what to do if a low-ranked insurance company offers you a fantastic deal. In short, you should avoid them, even if the premium is attractive. Remember, you want your insurer to be there for you if you need them, so it may be best to pay a bit more in premium to have the peace of mind that comes from a more stable and reputable company. My fourth tip: if you're looking at the quotes you have in front of you and they are still a bit too steep, you need to consider whether to continue insuring the vehicle itself from physical damage with collision and comprehensive coverage. This is especially true if you own an older vehicle, that is, one that is at least 10 years old. The rule of thumb is that you should drop comprehensive and collision coverage when their annual cost is more than 10% of the vehicle's retail value. From that point on, you will carry only liability coverage on that older vehicle. For example, let's assume you own a 10-year-old Honda Civic that is worth $5,500. If your annual premiums for comp and collision exceeds $550, that is 10% of the car's value, then it no longer makes financial sense to keep those coverages. You can go to Edmunds.com, KBB.com, or NADA.com to find your vehicle's retail value. Tip number 5 is to pay a higher deductible. Quotes for car insurance typically come with a $500 deductible, but you don't want such a low deductible. If you make the mistake of filing a small claim against your policy because you have a low deductible, the insurance company may raise your rates. File a claim only when something major has occurred. You should choose a deductible that is as high as the insurer or lien holder will allow if you have a car note. Go with a $1,000 deductible and you will pay much lower premiums and not be tempted to make smaller claims. My sixth tip is that there are a ton of various discounts that may be available to you. Some of them you get without needing to do anything to qualify. Some relate to your profession or if you serve in the armed forces or work in education. So always check to see what may be available to you. I would include a list in the description of some of the common ones that you should ask about. It is important you know how to shop for auto insurance if you are to find decent, inexpensive coverage. But do consider the company's reputation in terms of customer satisfaction and complaint handling. And don't be enticed by a low premium, but make sure you're also choosing a reputable company. If you've gotten value, hit the subscribe button and like this video to get the most out of your money. Leave a comment saying I subscribe and I will personally respond. And as always, see you next time.